Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday, August 15th edition of Benzinga's PreMarket Prep. I'm Spencer Israel, here with Joel Elconin and Dennis. They got a jam-packed show for you folks today. We got some 13Fs to discuss. Not a ton, but they will probably lead the show. Also some earnings, Home Depot, TJX, Dick's, Coach, Advanced Auto Parts are the big ones reporting this morning before the bell. Urban Outfitters to report today after the bell. Two guests for you on the docket. First up at 8:15 will be Jill Malandrino. She is a global markets reporter and the host of Trade Talks on NASDAQ. And then at 8:35, we are joined by our options expert, Nick Shaheen, the author of Create Income with Option Spreads on Marketify. Joel, what's up in the markets?
The markets, you just said it. S&P's up 5 1/4 at 68.75. Your pre-market high, just under your 3 and 4 day highs. Those are in the 74 handle, 73 1/4, your current high. Pre-market low, 62.50. That's right there with the close. There'll be no downside action until we take that out. SEP crude trading in the red here by 37 cents. 47.22. I was looking at this one on the chart, and I don't know if Flack UK is in here, but man, he was holding on at that $50 level and had one day where it shook you out, actually 2 days, and boom, $50 was a key level. Now we got a lot of air to under 46. Gold and silver in the red. I mean, why own gold and silver when you can own growth stocks? But let's bring in Dennis. And Dennis, you made the Wall Street Journal yesterday.
I did. You want to talk about shakeouts? Okay. And, and there's not a lot of traders that brag about their losing trades, but we know it's something that I do here, and I will brag about this losing trade here too. I sold the absolute bottom in Snap. Yes, I did. 11.28. That was one of my sales down there. I don't know if I was the only person selling 11.28, but some of my stock went away at 11.28. I bought the open, so just take you through the trade there. I felt there was going to be a rebound in Snap yesterday. So my idea was right. I don't know why I was feeling that. I just felt it was overdone. I felt like it was time for a rebound in Snap. So I bought the open and opened at 11.50. I brought it up. It was already trading down 11.30. I'm like, you know what? I don't like taking heat. We know how I play my opening strategy. I like the things to open near the low, not go down 20 cents right after I buy them. So I'm all about discipline and all about cutting losers. So I turned around and hit the bid, which was 11.28. And, then I continued with my other opening trades. And I have 15 to 20 trades on usually after the open. So I'm working out of them all. And I look back at Snap and it's trading up. And I was like, oh, I go and look at it and bring it up. I was like, I sold the low. I made the journal. We always joke, and that was from you, Joel, back in the pits day, wasn't it?
I was just trying to think where I came up with that.
Where did you get that?
I don't know.
From you for sure.
Maybe I made it up. Maybe I was just upset one day or something, and I sold or most likely bought the high of the day. And the Wall Street Journal, they still print all the prices, or they just give up. Really waste all that ink here when you can get it online. But you kind of got me, Dennis, because you're often quoted in the media, and I thought, someone from the Wall Street Journal called you up to know what you thought of Snapchat, and you gave them a quote, and then you got me at my own trick.
No, I used yours because Joel always says if you sold the high, or if you bought the high or sold the low, well, you made the journal because those highs and the lows are printed in the journal. And yesterday would have showed 11.28. That was me. That was me on SNAP. So that's the bad news there in Snap.
What, you got some good news, though?
As traders, you're going to have losing trades. Does that bother me? It bothers me zero. I just thought it was fun to, tweet it out about it because everybody always tweets how good they are and how many good trades they have out there. Well, I figured I'd tweet, well, this was a bad trade. I obviously was the dumbest person in Snap because I may have sold the all-time low at 11.28. So,
but you didn't let that deter you.
The good news, actually. Here's the good news is, how I'm a fan of the 2-day move. And I bought the stock yesterday, just after hours. I was going to buy the close at 12.60. I was like, I just had a feeling I might trade down a bit. So I was able to pick some up at 12.56 and 12.57 last night, just for the overnight trade. I was just coming in here just saying, I think Snap actually, might have, it's a good candidate for the 2-day move because the up moves out of the blue. And Cantor Fitzgerald coming out through for me here, upgrading the stock this morning. So I'm making back all of my losses and actually making more here on the snap this morning. So because I lost 20 cents yesterday on my long, which could have made me money, but I'm making 40 cents here this morning. So SNAP coming through.
All right, pre-market high, right? We're just off where we're trading now. You made a high at 13.17, currently hanging out at $13. Not a lot to hang on. 13.14 was yesterday's high, folks. So if you want a 2-day rally in snap, you got to get back above 13.14 and hold that, and then maybe get into the upper $13 handle. 13.96 was your 3-day high. I tell you, of all the IPOs I've seen, I've never seen one come out. It just makes so many all-time lows, day after day after day, and then he got hit on earnings. But on the rebound today.
You haven't seen that? What about Apron?
Oh, that's right. I've never seen two at the same time do that. Blue Apron, Dennis, let me know when you're going to sell out of any Blue Apron you own. And $5, the all-time low in that. Hit that a couple times. Luke asked me, what would I rather own? Blue Apron, Snap, what were the other ones?
I think it was between those two.
If
you had to own one.
Ooh. I don't want to own either, even though I own Snap right now just for an overnight trade. It will be gone this morning. Don't worry about it. This isn't going to be a long trade for me.
I think that's an easy answer. For me, it would be Blue Apron because it's trading at $5.36. So the most I could lose is $5.36. And Snapchat's trading at 13. So the most I could lose is $13.
This doesn't set up bad either, that Blue Apron. I haven't looked at that. That could be a 2-day move happening here. Look at the nice move yesterday. A little double bottom around $5. Stocks there offered 536, bid 515. I don't mind this setup.
You're out. You're out.
You're out. That's a setup for a trade. So you know what? Right now, Blue Apron I'd rather own, even though I own Snap. But long term, this thing takes up the $4.99 low. I'm out of there. So a little double bottom setup, pulls back. Maybe I'm interested here in the low fives. Interested in low fives. Not if it goes through $5 though.
I don't got a 499 print. I have a 503 low, a 5 even low, and a 503 low. So
it's 4999 I have. So yours probably rounding. I have the 4 9s. So 499.99 because we know it's price improvement garbage and all this other odd, even though SEC Rule 612 for bid sub-penny quoting, we somehow end up with all these sub-penny trades. So anyways, we're not going to take this into market structure. It's way too early in the morning. There's way too much cool things to talk about. So let's jump over into the earnings parade here. And that is Home Depot leading the charge. And I looked at this. I actually had my cell phone. I was kind of, up this morning. And I'm looking at my cell phone just after it reported around 5 o'clock in bed. And I'm like, should I get up and trade this? I'm seeing Home Depot trade up $3. I haven't even seen the numbers yet, but I'm like, man, that up $3. I'm like, they've had to blow it away if it's going to stay up there. And then I saw it only beat by a few cents. I was like, man, I should get up right now, turn on my trading computer and go short that thing at 158. Well, I wish I wouldn't have been lazy because I couldn't get myself out of bed. I was like, forget it. I'm just too tired. I went back to sleep. Should have got upstairs and turn on my trading computer and actually hit the Home Depot because it is now down in the red and giving back almost all of those gains. Spencer, give us the details.
$2.25 versus $2.21. Sales of $28.1 versus $27.8 billion. So they are coming in just higher than the estimates on the EPS and the sales. As far as guidance goes, they see sales guidance will be up around 5.3%, comp sales up around 5.5%, and the fiscal year EPS coming in 4 cents higher than the estimate. Although comps for U.S. stores will be up 6.6%.
So pre-market high, Joel, I saw it 158 at 5 in the morning when I was groggy. How high did it get?
I see. It's so funny. I'm looking at two different platforms. One says 58.11, 158.11. The other says 157.80. So I pick your point.
I think I saw 158.
Yeah. Okay. Then we'll go with the
158.11.
alternate.
Anyways. You've got it. You know what? If you're trading on earnings and just trading on the numbers, look at a chart. I mean, it does matter. I mean, we joke, and the fundamentals are, usually more important than the technicals. But when the fundamentals are like wishy-washy, the technicals take control. And this stock has so much resistance up there at the old 160 highs. I mean, here's a stock that got Amazoned just a few weeks ago. Now it gets the run up ahead of the earnings, and then the pop on the initial earnings, which weren't that great. They were okay, but they weren't superstar earnings. So it's not surprising that it gives it back. And here it is. It's down 76 cents in the pre-market, 153.50. And you just got to wonder, if people aren't still concerned that Amazon is looming here. I mean, obviously there's going to be no Amazon in these earnings. There's going to be no Amazon really, but if their thoughts are that they're going to start, selling appliances, through Sears or whatever, or if they ever figure out the lumber thing, maybe Home Depot and Lowe's aren't Amazon proof. And we know this market likes to Amazon stocks. So they got Amazon, they come back. I think there's still a lot of nervous Nellies out there taking profits.
You got to talk about support now that we missed the resistance. You have a buyer at the 153 area. This is bases only the 15-minute chart here, as you can see over the last couple brackets. Just 2 daily lows. That's minor support there. I think with the price action I'm seeing now, I think I might try and maybe not today, but hold out for the 150 area. You had 3 lows from 49.92 up to 50.80. That's also the 50% retracement. Really, the daily low at 53.08 is your August 8th low. So point for this thing to hold 53. We're printing 54 now. In order to get the bottom of yesterday's range, you don't have to go very far. 53.56 was the low from yesterday. And maybe the close, 54.25. But Home Depot, nice price action in the after hours in pre-market. And how's Lowe's taking the news?
No trades. 50 shares. It was trading up on an odd lot, but it's already offered 78.15. I highly doubt it trades up today. It's going to follow. Well, it depends on what Home Depot does. I mean, it just follows it. And usually the way I play the sympathy plays is with a Lowe's Home Depot, it usually moves somewhere between 30 and 50% of the leader. So for example, you had Home Depot trade down 3%, just hypothetical. Lowe's will often fall 1% to 1.5% on that. So, a lot of people pair these things up and they pair them even. I was like, it doesn't work that way. The leader always moves more. So you just got to know about how much. So you got Lowe's here actually just trading flat right now. But I mean, Home Depot's not down much either. So we'll have to see what the leader does. And then, that's how the ratio that I traded in is usually about 30 to 50% of the move.
Do you have all these ratios written down somewhere?
In my head. Okay. All in my head.
Yeah, because they're different.
I know
sometimes.
You could write algorithms for this, and I used to trade out a lot of this stuff algorithmically there, but I just find that I seem to do better without that. And maybe I'm wrong. Maybe I should go back and maybe I just watch a quant fund and forget about it and just use all these ratios and use when Goldman Sachs upgrades something that's worth 3% and use all this stuff if it's only down 1%, automatically buy the stock. I mean, it probably would do well. But I think there's just so much. In my strategies, there's so much feel incorporated into it too. Like I just, get in the trader zone. And, this is something, that a lot of traders, have traded for a while. Just, it's a hard thing to code.
Shake.
Like, how do you code feel? And I think that's why, I still make money every month because I think, I haven't been automated out of a job because I have a lot of feel in a lot of my strategies. And it's such a hard thing. I mean, I'm using tapering. I'm using a lot of different things, which, are things that you could code. But because of that whole feel thing, I think that's, why if you get those traders that have just traded for a long time and they got the feel, they get in this trader zone, that's a hard thing to automate.
What's your feel on advanced auto parts here?
It is not a good feeling, I'll tell you that. AAP. Spencer, give us the details here. It's down 13% more, man. This stock has went from bliss to, I won't say the word, but you know what rhymes with bless? That's bad.
Okay. EPS of what? $1.50.
That's a PI.
Okay.
We got it.
I got it.
I have to spell it for Spencer.
$1.58 is the EPS versus $1.67 is the estimate. Sales of $2.26 billion versus that was the estimate actually $2.26 billion. So they missed on the EPS and they met on the sales. Let's do this one quickly before we grab our first guess.
Wow, down $14 here. Hit again. I mean, this is just a mess. This is going to hit, obviously, AutoZone. I haven't even brought it up yet. Zebra O is down 4% in the pre-market. The other one, O'Reilly. O'Reilly is trading down 3.5% in the pre-market, too. I mean, this is a disaster.
Yeah, and SORL Auto Parts, that had a bad report yesterday. So if you were leaning off that, pre-market low 93.50, and I'm just gonna go to a monthly here. And what do you see here between like 80 and 100. You see one big bar, a low just under 100, and we've taken that out. So I don't know if you're short, pick your, your levels, your half and whole numbers. Also keep an eye on the pre-market low. Right before that bell, it stands at 93.50. Let's see what Jill thinks of some of these retail
bring
stuff.
it.
Yeah, Joe Malandrino, global markets reporter and host of Trade Talks and NASDAQ, will be right up in a moment. So we'll be right back. And welcome back, everyone, to Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel O'Connor and Dennis Dick on a rainy day here in Detroit. But we're on the line with Joe Malandrino from New York City. Jill, how's it going?
Hey, good morning. How are you guys? It's great to be back with you.
Great to have you back. So it's been a while since we had you on the show, Jill. And in that time, you got yourself a new gig at NASDAQ. Tell us about that.
Yeah, we have a lot going on right now. So I am officially with NASDAQ after working with them in a number of different ways from a media perspective over the years. And I am the host of a new show that we have. In fact, we're building out all of our media organically, so it's a really great time at NASDAQ from that perspective. And the name of my show is Trade Talks, and we focus on, for the most part, options and derivative-related products, but we also talk to industry experts providing thought leadership across every gamut of the financial industry spectrum. And it's really taken off. We launched on March 9th with the #1 social media program at NASDAQ right now. So it's been quite a ride, and we're really growing in leaps and bounds. I'm not sure if you guys are aware, but in April, we launched our NASDAQ Felix options trading floor with only live open outcry floor. Right now, we report there live every options expiration Friday on Twitter. So definitely something that you should be on the lookout for. We report from 9:30 to 4, and we have a slew of guests, options industry experts, and we're also doing a lot of work with the OIC and registered investment advisors. So there really is something for everyone on the program.
So, Jill, you talk to people every day about the markets, and you're in the markets. What's the general sentiment that people that you talk to have expressed with regards to this market that we're in?
It's been really interesting. Even when we got the pullback last week as North Korea rhetoric hit the tape, it almost had a feeling, and of course, hindsight being 2020, it's easy to be a Monday morning quarterback, but it almost had that kind of feel the way Brexit was, or on the overnight when Donald Trump, pulled out that surprise win for the election. It almost had that sort of feeling where there was a significant sell-off. We have, it's very rare that we have days like that. In fact, I've noticed the pattern. It seems to happen in the middle of the month, once a month, usually on a Wednesday, although it's just on a Tuesday. And the big question was, okay, you know what, for people who have had long fall positions on, had a great opportunity to take them off and make the money back with that. It didn't feel like there was a significant trend change. The composure of the market had shifted, and one market session is not a market make. We don't understand that, but and we've seen that play out this week, where over the weekend, the rhetoric shifted to domestic terrorism, not what we have going on overseas, and the markets have completely reversed because there was just no rhetoric in the market. And it feels as if we're going to continue on the course that we're on, not necessarily a straight up trajectory, but the fact that corporate earnings have been quite good. Economic data depends on what day it is, but it's slightly improving, and it doesn't feel as if composure or trend has changed yet. I certainly feel that way, and most of the people I speak with echo the same sentiment.
Jill, actually, one of the things we were talking about on our pre-market show before we went on the air today is, we've had some 13Fs on Friday, and then we had more yesterday, and they're not really seeming to move the market or move stocks in any way like they used to. And I'm wondering if you've observed that and if you have thoughts there.
I think what's interesting is, particularly over this quarter, nothing is moving the needle. Even with the exception of Apple or Snapchat that have had these huge earnings moves, the reaction has kind of been quite muted. And I think even with filings now too, I think that the marketplace understands that these filings doesn't mean that they just put this position on that day or the day before. So I just don't think that the headlines are making as much of a difference as they have in the past. Now, I don't know if that's a function of the invisible hand, or there's a theory that's out there right now with PPT that we're just going to continue to see this bid underneath the market. But it seems as if, if you look at it from a technical or fundamental perspective, that there is nothing out there that is going to create significant trading opportunities. It's more of a slow and steady grind to the up or downside, depending, on what you're looking at.
Jill, Dennis Dick here. What do you make of this market that seems to, and I'm talking the overall S&P here, that seems to shrug off all worry? Because here, there's a lot of things if we really want to worry right now, like the North Korea worries that we had last week when the Dow fell significantly. I mean, here we are 3 trading days later, really, from that, and we've bounced back and gotten back almost all of the losses again. What do you make of this market that just seems to just not worry about anything?
Yeah, well, if I had that answer, I'd be living on the island of Jill. And not commuting.
That's what we're trying to get you. We want to move to islands.
And that's what it's so frustrating. I mean, especially for the day and swing traders out there, it's incredibly frustrating watching the market rip up on the open and spend the day in 1 to 3 handle trading ranges. I see that frustration. I live with a trader. I see it, hear about it all the time. And we're taught, stock trading 101, that markets don't like uncertainty, right? And over the past 18 months, that particular philosophy is completely out the window. It doesn't matter if you're looking at fundamentals, it doesn't matter if you're looking at charts. This market seems to be on an uptrend. So the question is, you take what the market gives you, but what do you really do with it from here? It does make it hard to identify buying opportunities because what level do you get in at? And then, of course, to short a market like this would be suicidal for the most part. You never want to short a sleepy market. And it seems as if we're only getting those 1 or 2 days of a volatility pop or drop, and that makes it incredibly hard to establish new positions, even if you have a longer term perspective. So, the question is, what do you do? How do you trade this market? And, it would be great if you could go back 18 months ago and just buy the SPY, but you can't do it like that. And I think what you need to do is just look for intraday opportunities, or if you have conviction in this market that we're going to continue to stay in this grind, pick out the stocks that you think from a valuation perspective look decent or have a strong enough chart to substantiate what you think about the stock fundamentally, because it as it stands right now, because the composure hasn't shifted yet, that this is the trend that the market is in right now. And I would not advise anyone to trade against that until you see that composure change. It's been a frustrating exercise, to say the least.
We're on the line with Jill Malandrino. She's a global markets reporter and the host of Trade Talks on NASDAQ. Jill, we got to ask you about the retail sector. It's quite some time since we had you on, and I guess we're not the only one to use the terms for stocks getting Amazoned here. With the purchase of Whole Foods, Dick's Sporting Goods. I mean, just the overall comments on the retail sector. Is this just something you should just throw out and just, if you're thinking of buying a retail stock, just turn around and buy Amazon?
It's really interesting because typically we focus on the retail sector when I'm on with you. And one thing I've always said is that retail is a sector of the have and the have-not. Clearly, Amazon is a have. Clearly, your housing-related stocks, Home Depot, Lowe's, for example, your discounters that we've spoken about several times, Ross, TJ's, they have carved out their niche with the consumer, and we've seen that reflected in their stock prices, right? If you look at the department stores, JCPenney, Macy's, Kohl's, it was a bloodbath for them last week. And I think that trend is going to continue. I don't know if it's necessarily an Amazon effect. I think that we might see that on the extreme coasts or larger cities, but with retail analysts that I speak with, and even I had a really interesting conversation with someone whose company does satellite imagery of different shopping centers to kind of gauge. You used to do feet to street with retail analysts. Now they actually use satellite imagery to gauge consumer traffic. There are pockets in the country, particularly in the Midwest, that they are still very loyal to the shopping experience and going to a brick and mortar store. So I think it's very regional. And I think people still enjoy that experience of going to a physical location. So I wouldn't write it off completely, but I do think it's going to be one of those things where retailers have to have that omnipresence, right? Where there's an experience when you walk into the store. It's a lifestyle experience. Then you also have the online presence. I think it's really interesting too, where you're seeing different companies put their stuff on the Amazon marketplace now as well. So I think in order to stay competitive or to even be a retailer at this point, you have to have the omni presence, and you also the omni-channel presence, and you're also going to have to understand that Amazon or other distribution networks are going to be a fact of life, and you have to figure out a way to make it work in your retail plan. So I don't think brick and mortar is completely written off. It's almost like the media argument: are networks going by the wayside because of streaming services? No. But I think that you have to really have that omni-channel presence, create that lifestyle experience, and that's going to be the way that you survive in retail.
Joe, last one, and we'll let you get out of here. Who in your view are the most Amazon-proof stocks? We've heard Home Depot. They report earnings today. Anyone else that sticks out to you?
In the retail sector, I would agree with you. The housing-related stocks are going to be, I would say, more immune than some of the smaller retailers or the big box retailers. Home Depot, for example, we do have that distribution network. The whole thing is with Amazon, because of the scale that they have, and they do have top-notch distribution. I would even throw this idea around, and certainly there's no speculation in the marketplace about this, none at all. But who's to say that? Okay, so Amazon went after Whole Foods to kind of get that higher end consumer as well. Why wouldn't they go for a smaller housing related stock like a Restoration Hardware with their distribution network and also get that higher level consumer? Again, that's just something I thought of. There's no speculation in the marketplace about that. So I think unless you could be competitive with your distribution network like Amazon, it's pretty much no fair game.
All right. We went on the line with Joe Malandrino, global markets reporter and the host of Trade Talks on NASDAQ. NASDAQ.com is where you can find that. Joe, thanks so much for hopping on today.
Okay. Thanks very much. Take care, guys.
All righty. 8:27 now. Let's get back to the earnings parade. Or you want to go into 13Fs, guys? Where would you like to go?
Well, finish the earnings, and then we can do 13Fs after. Well, we got three more big ones really to talk about here. Dick's Sporting Goods, you mentioned it. It is absolutely destroyed here too. I mean, we're down 17% here now, down $6. I mean, this is just a disaster. Even before we see the numbers, Spencer, obviously they said something really bad.
Well, you can't lower guidance. We all know that, but that's what they did.
The algorithm says do not lower guidance.
That's what they did. So as far as the Q2 EPS of 96 cents versus $1.01 estimate, sales of $2.16 billion, which was the estimate. So a weak Q2 again, though they were lowering their fiscal year guidance. The EPS lowered pretty significantly. It was $3.65 to $3.75. That was the fiscal year EPS. Now it's $2.80 to $3. So they're cutting it a lot. And the Q3 EPS, 22 cents to 30 cents. 56 cents was the estimate.
Joel, you got levels for this? This is just obviously taking every support level out. I've got to go to the monthlies to try to find anything here. And back in 2011, we were down here. What do you got?
I got a pre-market low of 27.81 and finding a little stability here after we hit that low. I see your October low of 2011 at 28.72. And then back in August, you hit 27.10. Dennis, I don't know. It's kind of close to it. I don't know if you see that 27.10 today. What do you think?
I'm not going to make a bet on it, but
I mean,
usually they overshoot, so it's bounced here off the lows here now. So, yeah, you're $1.50 away from it, so it looks like it's gone straight 532,000 shares. But I'm not running in and rushing to buy this thing either because this is a mess. This is, something direct. Like, I don't really understand why this thing got up over to, $62 at the beginning of the year. Why were they buying Dick's Sporting Goods so hard? I mean, it went from in the beginning of 2016, it was down here in the low 30s. It ran up 100% in 2016. Why? Was Dick's just going to not be Amazon? I mean, it just seems like, and not only that, it's just, there's multiple things, I guess, going on here at Dick's, but these big department stores it doesn't matter what they sell.
Yeah.
And when you got that big of stores, and these are big stores, there's big expenses running with those stores. And when, you know, you have competition coming in, if it's from Amazon or from wherever, and your sales are getting hit just a little bit, those margins are razor thin. And this is what happens.
Do you have them over in Canada?
No, we don't. We should. I mean,
They're huge, man. We've said this.
Yeah.
We've talked about this on the show multiple times. Those stores are gigantic. They must be
Too big now.
10,000, 12,000 square feet. I know, and there's a lot of overhead associated with it.
Yeah.
Down 616. I would first, you know, if we're trying to bring in a short, hold out for that pre-market low. Of course, even though it's down $6, at some point there's going to be a rip roaring rally. Pretty good volume is trading here as institutions are dumping this stock. They just get me out. So not a good report for Dick's Sporting Goods.
Other one, Coach, that reported. It's some bad retail reports again. I mean, this retail earnings season is not starting with a boom. Even the Home Depot decent numbers, they hit it on there. Is there any retail that's straight? I don't think none of them. I think they're all down. TJX is down too. 100. The big five that reported here this morning, all of them are down. Yucky. COH, give us down 8%. Give us the numbers.
50 cents that beat by a penny, sales of 1.13 versus 1.15 billion dollars. Fiscal year EPS coming in lower than the estimate. Sales coming in lower as well. So, like you said, everyone's down.
Are all down. Coach is down 8%. I mean, it's just tough to own retailers, and you know, you can blame this on Amazon, but it's more just sentiment towards the sector here now. People do not like retail stocks, not at least your traditional retailers anyways. It's Amazon versus the world, and the world is losing right now. I don't know if that's going to always be the case, and I think there's going to be some buys here, and there probably already is, you know, some from a valuation perspective, some cheap stocks out there, but man, you know, as of right now, just the sector is just in shambles.
Boy, oh boy. Pre-market low is 44 even. And for you bulls out there, it's not a good sign. We are not catching a bid off this 44 even level. When you go to the daily charts, it looks even more messy here because you're getting into a gap area from earnings. So you are feeling that. I think you had I don't know if it had a bump off earnings and then a upgrade or something, but you're filling one gap and then you got another one here between 38 and 40. But looking at the top of the one gap at 42.42, if you could get through that $44 level, but a little bit of buying going on here at 44, coming back on the upside. Man, there'll be a lot of people hoping for this thing to get back to 44.5. And even if it gets through there long term, all those buyers are 46. They would love to see 46 again.
TJX just came out. Numbers, Spencer, just broke here at 8:30.
Up TJX for. Oh, actually, hold on a second. Yeah, I did see that they came across, but I don't have the numbers for you right now. Let me hop over to another source. I'll get you for them in a second. Joel, why don't you do a quick test?
Well, they kind of like it. I kind of like it here. TJX got a quick spike up.
They like it for two minutes. It's already trying to go red.
You're right. This just a quick spike here on that number, and you got to 71.36, but now you're back under $70. Got to hold the close here. The close from Friday, or excuse me, from Monday, 69.62. So as long as it stays above there, look for a little bit of a rally. Below 69.30, look out. You don't have much support until a low at 68.11 from July 26th.
85 cents versus 84 cents was the EPS.
Penny beat.
Okay.
Penny beat.
Beat by a penny. Is that good enough? I mean, the stock was hit a little bit ahead of it. I don't know. This is a little bit of a different, like, if there's any, they've been saying like the Burlington co-factories, the TJX, those ones are a little more Amazon proof because, you know, they're discount retailers and those stores are still kind of in. I don't know if that's true or not, but these stocks have obviously held up a lot better than your traditional retailers like your Kohl's and your Macy's and your Dillard's. But that being said, you know, we got a pop up here on the initial report. It went over $71. Immediately back offered at 70. We're trading odd lots at 69.90 here right now. Every retailer is down here. Tough to be a buyer of retailers.
If you do go into rally mode, you get near the $72 level. Look out. 71.75 was yesterday's high. Then your August 8th high, 72.09. So that is if it goes into rally mode. All right. time to bring in Tricky Nicky. Are we going to bring him in on the fly here, or you want to take a break?
We'll bring Nick on the fly. Nick Shaheen, author of Create Income with Option Spreads. That's the name of his site on the MarketFi platform.
Good morning.
Nick, how's it going?
Great. You?
Pretty good. It's raining here in Detroit, but not quite as bad as wherever you were.
Yeah, that was the last day we caught, they call it typhoons there, which is pretty much a different word for hurricane, I guess. It depends where they happen. So, yeah, but we got lucky. We had 10 good days. Can't complain.
And now you're back. You're back into the market mode here. Did you give you a few days to get your market goggles on here? Just give us an overall assessment here. We did have a correction. I think you were back for that, but back up near all-time highs. Give us your broad market assessment, Nick.
Sure. First of all, the word correction. I think we were, 2%, maybe less than 2% on the Dow off of the all-time highs. So we should put that in perspective, that it wasn't a correction. It was just a couple of bad days. And as of this morning, I think the ES completely erased a red candle from that quote correction that we had. So the bulls are still in control. And the fact that the headline, the North Korean headline, is now dead officially, I guess, as of this morning. And so they go back to doing whatever they were doing before. So as of yesterday, I was looking for 2465 in the ES, the E-minis. And then after that, 72, and they got to 72 overnight. And let's see if they do it and maintain it and how they use it going forward for the next day or two. So just like I don't buy puts at the bottom of that correction that we just had, and I don't buy calls right here. I just want to see what they do. In other words, I don't pile in long just because the bulls are in control. When I say that, I can rely more on the dips being bought than actually appetite to go even higher and higher and higher from here. Meanwhile, there are some stories in individual stocks, whatever stocks you track, you can see where they stand relative to their own price action and trade that.
Nick, I brought your S&P chart up here, and you have some notes with us here, and I have never seen you do notes on this. Can you just explain what you got up here on the chart for us as far as that box goes?
Sure. The notes are just, for me, a reminder as to how we got here. So if prices move, I read the notes and I see, okay, have we been here before? What did we say last time we were there before? So as you can see, from 8:15, I said that it's like nothing ever happened. We erased that candle and we got to the two levels I mentioned. But coming into here, I can read back and see how that happens. It's kind of like keeping your own log. So even though I have it fresh in my head, but if I go on vacation and come back, I can read it and remind myself how we got here. So like I even keep notes from the 2200s to see if we ever get back there, when we ever get back there, how did we slice up into it to see if there's any hints to take from it on the way down. So again, the big picture is that nothing changed. We're still, the bull is still in control. We still have the promises that have been dealt to us. Some of them are coming due in September, so I don't know what's going to happen with that with regards to tax reform and extending whatever spending bills that we have. So there might be some political fights. Maybe the next stink in the market will come from the politicians. But for now, the headlines, the quote, scary headlines have become familiar. And Wall Street's comfortable with it. So they go back to doing what they're doing, which is buy the dip and see if they can move it forward. So that's why I don't buy the calls yet, because I want to see how much appetite they have once we hit the levels from which they've faltered recently. So within that, you can trade. For example, gold was looking like it's going through the roof, but if you know anything about gold, you know that it's a safety trade. So as soon as the headline will die, gold will die. So gold also did what was expected. And I sold some credit call spreads into gold, the spike, and I can either sit on them and see if they die for maximum gain, or I could just trade around them by selling some credit put spreads once it falls low enough. Things like that. So there are things to do, even though we're kind of stalled at this all-time high level within whatever tickers you track.
Gold getting killed right now. This morning, we're down 1% here on the GLD. So looking good there for you, Nick. Jumping back over here to the earnings parade. We did not have you on last week to discuss the Priceline earnings. So I know this is a stock you'd like to trade. PCLN got absolutely murdered, loses 200 points since its earnings report just 4 days ago. Give us your thoughts here as PCLN is now trading down 200 points from where it was last time we talked to you.
I know that was a big move for a high ticket, high price ticker. By saying high price doesn't necessarily mean expensive. It's just a high price ticker. And the correction was meaningful. It went back to a consolidation level for about 6 months or so. And so from here, if you wanted to go long, you could have gone long. You can still go long if you assume that the market in general is going to meander here or higher. In other words, I don't think Priceline will get punished further than this by that much if the markets hold up. So on its own, it shouldn't have more bad news, short of a new headline emerging like Ebola or something like that, that people will start to extrapolate, oh my gosh, it's going to hit travel worldwide. So there is a worldwide picture in Priceline, like we've talked before. Technically, I like it. I could sell puts in it. The premiums are insane. You can get $2,000 for one contract, basically, to sell a put for the, I don't know, maybe October or something like that, with another 15% buffer from here. So if you know your stuff, you could, obviously this is a high margin puts to sell, so you can do credit put spreads instead. So if you wanted to go Priceline long, if I wanted to go it long, I can do it comfortably here, but it's also a bet on markets in general. So like Amazon, Priceline, I don't believe will fall on its own further. It had a headline that brought it down. It needs another headline to bring it down, and there's not one in the forecast. A surprise headline will bring it down, obviously, but that can happen any day for anyone.
What do you make of the NVIDIA bounce back? This is a stock that had a pretty good report. It actually bounced a little bit initially on the earnings, and then they slaughtered it, and they brought it all the way down to the low 150s. 2 days later, gets almost all the losses back, and that was yesterday when it was trading up $11. What do you make of pricing action here in NVDA?
Well, NVIDIA is like Apple these days. It's like hanging at the all-time high. On bad days, it seems like it's been hit hard and it's going in the toilet, but it's still like right there next to highs. And I wouldn't short it. And how to go long it, you got to pick your entry point. I have shorted it before and I got lucky, but that was eons ago. And I wouldn't want to do it here. And on dips, I would sell puts or put spreads in it. And again, like Amazon, like Apple, at these levels, it's a bet on the markets in general. So on its own, it seems to be okay with no mistakes from management. So on its own, it shouldn't have a reason to fall without a new headline. So it is a buy the dip stock. And if you think the markets were going to bounce for that last dip you had, you could have gone long NVIDIA. However you like to go long NVIDIA, either buy the stock or buy calls, or my favorite is sell puts or put spreads, or both, sell puts to buy calls.
All right, I got a chart for you here. DIOD. We're getting Rob Hood in the chat, and he says, "Hey Nick, do you see any more upside in this stock? It looks like stair stepping to some degree. I mean, DIOD, trying to break out 27.5, big level. What do you got for me, Nick?"
It's technically frisky, and it looks like it's. I don't know what it's doing this morning. What is
not
it
much?
Doing this morning?
Not much. I checked, so we didn't get sidetracked.
But before I open my mouth, it's like, oh yeah, it's looking like it's going to go up, and it's down 15%. No. It is technically frisky. By that I mean it's setting higher lows recently, and it's attacking those higher lows are butting up against a neckline of sorts, where if they can pass over the neckline, they can overshoot. In other words, there's a big fight between bulls and bears, and that's like an inverse head and shoulders, cup and handle, whatever you want to call it. It's basically the bulls are fighting the bears on this neckline, and if the bulls prevail over the neckline, it tells me the bears are tired, and the bulls will overshoot a little bit. So 29-ish eyeball.
Well,
I don't know the fundamentals.
It's really trying here. 27.5. I mean, that I had the monthly chart before I brought this up, but 27. Well, this is a monthly longer term too. So Rob Hood, you want to see this thing over 27.5. Down War Dog is asking about Amazon. Amazon's gotten hit after earnings here. A little bit of luster's off the shine in Amazon here. Nick, where are you looking for a pullback to get out and sell some puts?
Okay, so Amazon, you could have sold puts if you thought the markets were going to bounce. So that was a headline that we had to bank on. So the traders did whatever they wanted to do around that headline. I'm going to post a chart and let's talk about it. So Amazon, the chart it has a couple of lines up top. So they're right here. There's one line right here.
What do you call that, Nick? What do you call that little crisscross formation there? Is that the name?
Oh, those are just lines. But to me, I'm not a technician. I just use technical analysis as best as a street person can use them. So what it tells me that it has potential, upside potential, just from a technical basis right here. Within 50 cents a dollar or something like that. And then there's another level around 9.95 that I'd like to see what it does with, which could bring it above 1,000. But the more important part is what it did around 954-ish. That's been the second, third, fourth poke, and that's a contention level that dates back to May. So in May, they had higher lows butting up against that area, and then boom, busted through it, and they've used it 1, 2, 3 times as support, including this time. So that becomes the meaningful level. So if I'm selling risk, downside risk in Amazon, I definitely want to be hiding behind that level and want to account for the loss of that level. So if they end up losing that level, then I have to make room down to like 910. This is not a forecast, but I'm telling you where I choose my levels to sell puts. So I want to be below 900. So that takes me out probably to September, October puts, not shorter than that. I don't want to short the puts for the weeklies. I don't like to play that game. I'd rather go a little longer, a little lower to create a buffer so I can know I can trade it on fundamentals and technicals.
Nick, John Dodson in the chat wants to know your thoughts on Walmart. He's posted a picture of a Walmart that is absolutely packed and lined up there. I don't know if that's been the case or if that's just a picture here just out of the blue, but thoughts on Walmart as we get close to their earnings report.
Okay, so I shop at Walmart, and the Walmart that I go to is in a nice area, and I can tell you the shelves are not stocked. Nothing has changed. They say, oh, we've done this, we've done that. The people that work there have gotten a little nicer, and they give you survey pieces of paper and things like that. And they have a person like on Costco now, they check off your receipt. Kinda they try, but if I don't look at them, they let me through, where at Costco, they don't. They don't. At Costco, you have to stop and they look at the receipt and they scratch it. So they're trying things, but I don't think it's things that's driving money. In other words, it's not making me spend more at Walmart. And I'm not sure they're going to see any like McDonald's epiphany. Oh my gosh, look at our comps, blah, blah, blah. So at this level, I'm not taking longs into Walmart. I don't have reason to short it, but I'm definitely not confident to take longs. So there's too much money too fast from that dip at 73. So I'd rather wait and see what happens with the earnings. And if somebody puts a gun to my head and say, buy a lottery ticket for earnings, I'll probably buy a debit put spread right at the money.
Yeah, well, and we were just talking about this thing. There was if we think just a month ago, they hit the stock down $5 because Amazon bought Whole Foods, and they thought, oh, this is going to compete with Walmart now. Obviously, the grocery part of Walmart there, and and then Costco really took the brunt of it. But here, Costco's still significantly off its highs. Walmart's way higher than it was even before that news. It's had the run up here. A lot of your other retailers are underwater. This one has been running up. I think expectations are fairly high for this quarter, and I'm not sure they're going to meet them either.
Nice one, David. Anyway, if I have money to put into retail, I'd much rather buy Starbucks or a Costco or even probably Nike. I think Nike where's Nike? Oh no, never mind. Nike is too high, right? So Costco is definitely a preferable stock for me to buy. It's been more. I have more confidence in the management at this point with the price action that it has had. Maybe Starbucks even. I haven't looked at it in the last couple of weeks. So yeah, definitely. So long term, I'd rather bet on those other two in retail, if I can call them comparables, rather than Walmart at these levels.
How about crude, Nick? That $50 level was pesky, and now we're pulling back in the lower 47 handle. I think you just like to trade the ranges in this one. Are you looking for the lower end of that range in crude oil futures?
Well, I wish I said it yesterday in the chat room. I said, I wish they would punish it again so I can sell more puts again, like I did before, like we've talked about before. My thesis has been in crude, it's very simple. OPEC. People say it's meaningless. I say you guys are wrong, and gals. OPEC is not meaningless. They still control a lot of the oil, and they matter. And the fact that too low, crude around like 45 or lower, it's bad for their pocketbook. They will defend the price. 50 and above, it's bad for their market share. They will hit the price. So trade the range. If it gets to 50 plus, you can try a credit call spread in whatever vehicle you'd like to do. At the lows, I sold naked puts in it, and they all profited easily. So,
Nick, also one question back here up on the chat, and I think you've talked about this before. Fuzzy's asking, what's the advantage of going out 120 days, and that just more premium for you to sell, right?
More premium and a bigger buffer. So if I can sell a risk with a 20% buffer from current price, that's a risk I can manage easily. What does that mean? If I expect a market crash, I can buy puts for pennies at that same level. So the market can go to zero. I wouldn't care. I still made my money because I own sacrifice puts, I call them. So if I sell a $45 put on a stock that's 65 and it crashes to zero, I own a $45 put that's shorter term that I paid pennies for. I can repeat it until I'm comfortable with the price level.
We've been on the line with Nick Shaheen. He's the creator of, he is the author of Create Income with Option Spreads, joining us after a little hiatus. Nick, glad to have you back. Keep us grounded here on the markets, and we'll talk to you again next week.
Excellent. Good to be back.
All right. S&P's leaking a little bit here, Dennis, off the highs of the pre-market session. I'm keeping an eye on mid-range here on the day, and mid-range comes in right here, right now, right where we're talking 68 even. So looking for it to hold here, go back up into the 70 handle, but a little bit of a sell-off here during the show today.
Let's talk 13Fs. And we were just saying on the pre-market show that they don't seem to move the stocks as much as they used to. It used to be like you'd see, Icon make a move or Tepper make a move, and those stocks would move on it. Buffett still moves them. So when you get Buffett, and we're going to tell you about his moves here in a second, when he has a new position, it will move the stock. But besides Buffett, the other activity from 13Fs seems very muted here again. Spencer, give us some highlights and tell us what Buffett did.
The only real stories of the day I have essentially going to be Buffett's two new positions, which are Synchrony Financial and Store Capital. So STOR and SYF are his two new positions. He's got about 17.5 million shares in Synchrony Financial. That was, of course, the financial arm of GE that was spun off, and he's now out of GE. Speaking of GE, he had a 10.6 million share stake. He is now out of it completely. He also reduced his stakes in UAL, AAL, IBM, WBC, and Wells Fargo, but Wells Fargo is still one of his largest holdings. He's increased in BMY, GM, and Apple. But I think the big story is GE and Synchrony.
I think so too. I mean, Synchrony Financial here is trading up 5.5% on the Buffett disclosure here now, so getting a big pop here. And like you said, that was spun off from GE. I'm kicking myself here because I had shares of GE for all those years, and they gave me the option, and all shareholders of GE had that option. Then they could change their shares over into Synchrony Financial. They could stick with GE. I was like, I stuck with GE for 15 years. I'm sticking with it, so I didn't change them over. Obviously, hindsight's 2020. It looks like I should have did that because SYF is now up at $31 and GE is now down 25. And Buffett looks like that's what he's lent, or I think this just happened. So he's obviously now went to Synchrony Financial as well. But GE trading down because Buffett dumped at 336,000 shares to sell this morning too. So a lot of other institutional traders are selling along with Buffett, and Synchrony Financial is 138,000 buy-in balance, trading up to 5.5% because Buffett is long.
Oh, GE trading at 25.25. We are down at the lows of the move, 25.19.
Ugly.
Yeah, ugly looking chart, and just looks like another long consolidation period here, now leaning on the lower end of it.
Yep.
So may see some institutional bids at 25, but 25.19 was the low of the move. Synchrony Financial, SYF, the credit arm of GE, getting a little bit of a boost. Probably had a bad earnings report here that caused the gap down, but not quite at your major resistance yet. That resistance in SYF, you have a high at 31.41. So that's coming into play right now. The pre-market high is right in that area. Above that, it opens up. You had one day where it spiked to 31.90, but two potential resistance level up $1.70. And how's the volume on this one? Are they doing any trading in this one?
Oh, yeah.
86,000 shares. That's not too bad.
A little bit of trading. So obviously it's SYF, yeah, 86,000 shares here. So trading up, that's the big one from the 13Fs. Yeah, do we want to mention the other one, Spencer, or is there any of them moving?
I didn't even write the other ones down just because they weren't moving.
Like
anything.
I know Icon did a few things. He had dumped a couple stocks.
Yeah. If you're on Benzinga Pro and you do a keyword search for 13F, you can get every single big headline from Einhorn, Cooperman, Icon, Tepper. Ackman's in there. I see Tiger Global. But again, no one's really moving anything. Buffett's moving stuff a little bit here this morning that we just talked about. But why is that?
You know why? It's because the video that I did a couple months ago, that the activity in these things actually takes place in the prior quarter. So, if you're looking at SYF and you think you're getting in here with Mr. Buffett, no, you're not. He was buying back here back when it was, under $30, when it was between 26 and 28. He was buying in the prior quarter. So people are realizing that they're not mimicking the same price action as they did as these people. So I'm taking credit for killing the price action in 13Fs. Is that okay?
Fine.
Yeah, we'll give it to
fine
you.
by me.
It's your fault. It's your fault I don't get to trade these things anymore.
What about ratings land here? 856 with 4 minutes left in the show. Anything worthwhile?
Well, we mentioned the Snapchat upgrade from Cantor here this morning.
You still holding on?
Snapchat. I just sold it.
Okay.
I'm doing that trade. I mean, you're not supposed to trade on live radios. I just sold up there at 1309, 1307 area because you know why? I was looking at yesterday's high. So I'm like, it got up there. It's right near yesterday's high here. I'm going to book it. So I was in it just for the overnight trade. Thank you for the 3.5% counter Fitzgerald. I will take it, get my losses back from my snap trade yesterday, and a little bit extra to boot. So that's good news. 2-day move works again.
And I saw something on CNBC. They showed a chart of Facebook, when and of course, it came off its IPO hard. And, man, this thing is getting hit hard. But, man, oh, man, I just don't know if it – I was bullish Facebook on the IPO. But, man, on this one, I just don't see it having the same kind of worldwide value that, or worldwide use, I would say, not necessarily.
We know, like what I've said long term, I don't like Snap. I think it's a single digit stock. That doesn't mean you can't have trades to the long side in it. So I got hit yesterday, but I made it on the long side today. So, there is trades. 14 is huge on this thing. I look at that 14 level, and that's 90 cents away from here. I don't think that's going to come into play. It would really have to take off to get up to there. But you've got multiple highs just over 14. I think there's a wall of resistance up there. So resistance very well defined for me up at 14.
Two other ratings that I just saw that jumped out to me. GoPro getting the Goldman upgrade today from a sell to neutral, and Rio Tinto getting downgraded to outperform at RBC. It was their top pick, and now it is only an outperform. And those are the ones that jumped out to me.
Rio Tinto's getting hit because gold here too. So gold and silver are annihilated this morning. We got SLV trading down 2.2% here now. That is a shellacking. Gold trading down over 1.1%. So gold and silver are just a disaster. No nuclear war, Joel. Why do you need gold?
Yeah, exactly. The GoPro, let's just at least we'll have to see what happens over the weekend. GoPro, you're getting a little lift off this, but you really can't clear.
Just a neutral.
Yeah, it's not. It's kind of like when they what did they do in Tesla after it got hit? They lowered their price target $10 after it had a real bad day and you had some follow through. So I don't know. We'll see what happens. It did have a double top at $10. It has cleared that, so holds 10. Chance to rally. Double top though. It can't even get to the 3 and 4 day high at 1040 and 1042. Coming back on this downside. I'm sure some people would like to see this at the mark, at the close, 9.74 after the Goldman Sachs rating change. All right, Spencer.
Just a couple more just to mention.
Sure.
Spinner in the chat. Win was upgraded WYNN by Deutsche Bank here this morning. They're putting a price target of $150. That's straight up 3 points in the pre-market. We have Deere downgraded at Bank America DE. That is offer down and trading down at 126.75 here this morning. So it's getting hit from that downgrade there. Those are the main ones. GLW is also downgraded at Goldman. So there's a few out there this morning from Ratings Land.
Spinner, let's see what happens right here at this pre-market high. Pre-market high is 131.74. I'm looking at the dailies here, and you did have a pair of highs at 131.13 and 33. So open into a little resistance. If it really gets going to the upside here, I don't know, 133. There was another old double top there from the 26 and 27. Spencer, do you want to wrap up today's show?
Sure. Looking ahead to tomorrow, our guest on the docket is Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners. And then as far as today's show, you can catch it again as it aired live on youtube.com/Benzinga TV. That's our YouTube channel. Also catch the podcast on iTunes, SoundCloud, and Stitcher. Don't forget about the Benzinga FinTech Summit. It's our event coming up in San Francisco on the 28th of September. To learn more, go to bzsummit.com. And to get a free trial of Benzinga Pro, go to pro.benzinga.com. Hope you enjoyed our show today, everyone. Have a good rest of your day. We'll be back with you on Wednesday.